What's good? It's your boy Reed Got Options, and thank you for joining RGO on another episode of Sunday Stocks. Like I always say, whether the market is up or down, we see green. And right now, it's a whole lot of red in the market, but we're seeing a lot of green if you're getting puts. At this current time, the market is down significantly around, excuse me, 3.75%. That's a lot. You have broken down to the levels of what we broke out in 2023, which is great. Don't panic because we can get puts. We're going to make money. Like I always say, whether the market's up or down, we see green. I'm going to show you today how to make money, how to chart, how to understand what I talk about in my Discord and I talk about in these YouTube videos, because I like to use these four things you're looking at right now. I like to use the moving average cross right here, or just regular moving averages. I like to use my EMAs, exponential moving averages, and I like to use the Fibonacci retracements. I know you don't understand how to use these or what these things mean, but if you stay here until the end of the video, you will understand. So I'm going to show you how I chart and prepare for the whole year, and then that's how you get into your day trades, your swing trades, and your zero DTE. So I'm going to clear this whole thing out for you guys. Then I'm going to walk it down for you step by step, what I like to do, what we talking about on the Zoom calls on Sundays, and then we go from there. So we're going to delete this, and then we're just going to close all these up. So right now, you're looking at SPY. You see this big ass dip from Wednesday all the way to Friday, and it's still gonna be more pain tomorrow. Trust me, it's gonna be probably weeks of pain. And we're in a technical bear market right now. So this was supposed to be a bounce area. We could have bounced off of here from, today, because Friday could have been a bottom, but market never bottoms on Fridays. Don't believe me, back test it. So this is what I like to do. I like to go to the 12-month chart, or the monthly, but the 12-month chart, because we're going to go from 2025 high, you feel me, to 2020 low, where we got that big sell-off, right? And we're going to grab a Fibonacci retracement. We're going to go here for Fibonacci retracement, 2025 high, 2020 low. And now we have all of our Fib levels. So since we got the Fibonacci retracement, we're going to talk about it and let you know what it is. And the Fibonacci retracement, this is a tool that helps you identify possible support and resistance levels by measuring how far a price might pull back from continuing in the same direction. So we got here to the top, now we're measuring the pullback. If we bounce here at the bottom, we're measuring the breakout. Are you following me? So it's based on a Fibonacci sequence, a natural pattern found in everything from shells to galaxies. On your chart, you draw a Fibonacci retracement from major swing low to high, or vice versa, and it plots horizontal levels. These are the horizontal levels right here, and you're going to hear the 618 range and 50% retracement level a lot when you're dealing with me and a lot of other traders, because this is a high psychological area in here. So these levels act as invisible lines where price might stall, reverse, and giving you potential areas to buy the dip or take profit. So what we're looking at right now, once you get a rejection from high levels like supports up here, once you get a rejection or breakdown from here, right, then you go to the next level of support. So I'm looking at SPY come down to 478, 462 before we even start to get a breakout, because we started to break out really into this bull market in 2023. So we walk it down, and then we go to the monthly chart, and you can see, boom, we still have room to come down here, 66618 range, 480 that we can go. SPY is sitting around there right now, because if you're looking at the after hours trading, SPY is definitely sitting at 484. So it's kind of close. If it breaks down from here, we're going down to the 50% retracement level all the way at 416. Now, let's go to the weekly and see what was going on way back when. 2020 right here. March 2020, we dropped when COVID hit, had the gap down, and we sold for 1, 2, 3, 4 weeks before we broke out. And then for weeks, from in May 2022 all the way to March 2023, we sat in between this range from the 50% retracement, 38% retracement level to the 50% retracement level right here, 414 to 370. So we were trading up in there in the whipsaw, 38% retracement level, 50% retracement level. Got up here, broke out, and then we used the 618 range to the 50% retracement level. And then October 2023, we started getting on the bull and we started running up. Every time we made a higher low, we just kept going higher, and then now you see where we are at. We are in critical levels, a lot of panic selling. We could get capitulation right here at 478, and then literally fall all the way back down to 416. This would be the heavy buy area right here. And you can use the way I'm charting right now, you can use this for all different tickers. Okay, you could chart like this on the day chart, you can chart like this on the 15-minute chart, all that when you're using 50%, not the 50%, but the Fibonacci retracements. So now let's throw our moving averages into the mix, because I love using my moving averages, and I love using the 50-day and the 200-day. The 200-day always acts as a magnet and a strong bounce or a strong rejection. So we're going to talk about that. I'm going to put that on the screen right here, and then when it loads, you can see that the 200-day is right here, and we felt the face of the earth on the weekly on the 50-day. The 50-day is this red line right here that goes boom 566, and then 200-day moving average is right here in confluence with the 66618 range around 466. So we can get this within the week. Within this week, we could drop 20 points in SPY. We keep dropping, right? So what I want to see is, since we have this rejection right here, what I want to see is a bounce right here in the 66618 range and the 200-day moving average. We could at least come back up to here, not around 530, but you know, around 480, and then come back down here. That's all I want to see. But I want to see a touch up here first, see if we hold or reject. So now what we're looking at is the moving averages, and to explain them, a moving average is a line on the chart that smooths out a price data over a set period, helping you see the overall trend more clearly. Remember, the trend is your friend. Think of it like this. Instead of focusing on every little up and down of a stock, a moving average gives you the big picture. That's why when in doubt, you zoom out. If a price is above a moving average, you might be in an uptrend. If it's below a moving average, you could be in a downtrend. The longer period, like the 200 days, the smoother and slower the lines are. Great for identifying long terms. And the shorter you make them, the shorter terms you could trade it. But I love using these on a 15-minute chart, 30-minute chart, because they also work. And then we have our EMAs. EMAs are moving averages also, but they're exponential moving average. An EMA is like a moving average with a twist. It reacts faster to recent price changes. So with the speed how it reacts, you would see this moving average, the EMAs, curling up real fast all the time. That's why I love using it when I day trade, because I can scalp real easily, because I can see once we get under the 9 EMA and the 20 EMA, then we're good money. So once they cross, that's bad news, right? Let's zoom in a little bit. Once these two moving averages cross, it's bad news, because the shorter time frame under the larger time frame is always bad, and we're just starting to get some pain right here, because the 9 EMA is crossing the 50-day moving average, and the 20-day EMA didn't even get here yet. So we still have some selling. Now, with that being said, EMAs give more weighted price to the most recent prices. This makes them super useful for shorter term trades who want faster signals. For example, the 9 EMA or the 21 EMA can help you spot quick momentum shifts and time entries more precisely. See, I don't have the 21 EMA. I have the 20 EMA because that's what I've been using for the longest. I may have made a mistake and put 20 in instead of 21, but it's been working for me for years, so I kept it going. Now that we uncovered all of that, hope I didn't move too fast. So if I did, just DM me. Holla at me, subscribe to the Discord. We could talk about it. I can break it down for you on a personal Zoom. But now what we're looking at right here is the vicious selling pressure because of said tariffs. Now, until tariff talks are over, we're going to keep selling until the whole world finds a happy medium when it comes to these tariffs. You understand what I'm saying? So let's go to the daily. We're going to walk it all the way down to the daily, and boom. Vicious selling pressure. We didn't even get the cross of the 50 and 200-day moving average, 66618 range. So we got the 66 right here, 618. I got it color coded also too, just so I know where we're at, because you can't see the prices over here. And then the 50-day moving average, 50% retracement level. So once we fall to the 50% retracement level, this is going to be a huge buy, You get what I'm saying? So now let's talk about navigating this market. We had a lot of 5%, negative 5%, negative 10% days for Friday. A lot of these plays, all these just dropped here. What you want to look for are stocks that haven't dropped super crazy yet if you're going to buy puts and wait for the bounce. Or you can just sit on cash and just wait. So like UNH, healthcare, all these things now, since the market's capitulating, everybody's going to pull the money out of everything. There's no inversing any moves. There's no none of that. What we are doing here is following the trend, and the trend is your friend. And even though it's been a lot of selling. It's only been 2 days with these big candles, so we still have time. If you want to catch it, Monday's the best opportunity. You feel me? If you're gonna try to day trade it, get in and get out. Don't always hold your day trade until the contract closes. That is not smart. That is not wise. What we gotta do is stick and move. If you're gonna swing puts, cool, because a couple weeks out, it still can be bad news because Powell's gonna be talking soon, and him and Trump are not seeing eye to eye, and we're gonna get to that with the Federal Reserve meeting. So that's for another video. But what you're looking at, Netflix is gonna be coming down. Netflix is not, hit the 200-day moving average. What you could do is play the 200-day moving average, and that could be your pivot right there. This could be your magnet because it's going to pull everything down. Coin, oh my goodness, coin is about to fall off the face of the earth because it's running with Bitcoin. It's running with Bitcoin. So let's look at Bitcoin now because I believe it dropped under 80K. And this is my 66618 range. Right here, Bitcoin gets into 77K. It is dropping all the way to roughly 70,000. Under that, 60,000. And that's going to be beautiful because this is where millionaires are made. When everybody's selling and panicking, you can ride that wave all the way down. And then when everybody starts buying back in, because people like Warren Buffett are sitting on cash, they're going to buy back in heavy. They're going to buy in at the bottom, and it's going to juice all the stocks, all the options premiums, and then that's when you get on calls. Optimism is great, you feel me, but hopiism isn't. So hopium, right, that's a drug to where like you're just thinking the stock market's gonna go in the way that you want it to go, and it's not gonna happen. You're gonna get burned. So follow your plan, practice, paper trade, chart up the proper way. We're gonna keep going over these moving averages every Sunday. You're gonna hear me talking about them a lot, Fibonacci Retracements, but this is my personal watch list. I know I don't show it all the time, but this is my personal watch list, and we're gonna attack it. Like, I like Apple falling something crazy. I'm talking about, I like Apple going to about, this is all sloppy right here for my day trades and everything. Get this out of here. I like Apple falling to at least 160 before we start trying to make a move, And Apple right now, since the market is trading, Apple right now is at 178, down 5% overnight. So if you're in puts, if you're swinging any type of puts, you are up thousands of dollars, and I commend you on that because my team, we're sitting in the Discord, we're juiced up right now. So with that being said, I know I might have been rambling on and on and on, but I gotta catch a flight. Hope you guys are making money, and don't panic, don't fret. The trend is your friend. And if you got any questions, just holler at me, you know what I'm saying? Drop a like, subscribe, and hit me up in the comments. So peace.